Hey everyone, welcome back to Corporate Decoder, the place where we dig into the details so you don't have to. Today we're looking at a Form 8K from XTI Aerospace, and let me tell you, there's more turbulence than a bumpy flight. It's a mixed bag of preliminary results and some changes in their accounting firm. Buckle up. This report gives updates on important events that a company must share with investors. In this case, it's about a change in accountants and some early looks at how XTI Aerospace performed financially. Alright, let's jump into the numbers. For the last 3 months of 2024, XTI Aerospace thinks they made around $1 million in revenue. For the whole year of 2024, they're estimating about $3.2 million. Now, that's the money coming in. On the other side, their operating expenses, which are the costs of running the business, are estimated to be about $10.90 in the bank and about $2.7 million. Side their operating expenses, which are the costs of running the business, are estimated to be about $10.6 million for those last 3 months, and a whopping $38.1024 they're estimating about $3.24. They believe they had about $4.1 million in cash and cash equivalents. That's like money in the bank, and about $2.7 million for the end of December dollar Monday. The other side, their operating expenses, which are the costs of running the business, are estimated to be about $10.6 million for those last 3 months, and a whopping $38.9 million owed. That's money they owe. Now, a big disclaimer, these numbers are just estimates, like a rough guess. The real numbers might be different when they finish all the accounting, so don't make any big decisions based only on these early figures. It's like looking at a blurry photo. You can get an idea, but it's not the full picture. They also gave an update on their cash and debt as of the date of this report, saying they have roughly $10.5 to $10.5 million in cash and owe around $200 in dollars and bala, which is a good sign. Now, let's talk about the change in accountants. This is kind of like switching doctors. On November 1st of last year, a company called CBI's CPAs bought the business of Markham LFT. Because of this, Markham told XTI Aerospace that they would quit as their accountant as soon as the company filed its yearly report called E24. On March 24th, the company's audit committee, which is like a group of people in charge of checking the books, said it was okay to hire CBIZ as the new independent accounting firm for the year ending December 31, 2025. But this was only if XTI Aerospace and CBIZ signed an official agreement. The report from Markham for the year 2023 didn't have any big problems, but it did mention that there was some doubt about whether XTI Aerospace could continue as a going concern. That's accountants speak for. We're not sure if they can stay in business. During 2024 and 2023, and up until March 24, there weren't any disagreements with Markham about how they were doing the accounting or any big problems, except for some weaknesses in how the company was controlling its financial reporting. These weaknesses were mentioned in some of their quarterly reports. XTI Aerospace gave Markham a copy of this report before they filed it and asked Markham to send a letter to the Securities and Exchange Commission, which is like the government agency that watches over companies, saying whether they agreed with what XTI Aerospace said, and that letter is included as part of this filing. So what does all this mean? Well, XTI Aerospace is still working on getting its finances in order. They're spending a lot more money than they're making, but they did get a nice cash infusion sometime between December and now. The change in accountants is due to a business deal, not because of any problems with XTI Aerospace's accounting, but there are some concerns about how well the company is managing its finances, and they need to fix those weaknesses. Top teamed up on my thoughts on this company. XTI Aerospace is an ambitious company trying to create a new type of aircraft. This requires massive investment and a long runway for it to take off. The current financials show a company heavily reliant on external funding to sustain operations, which isn't unusual for a company at this stage, but definitely raises the stakes. The substantial increase in cash reserves since year-end is encouraging, suggesting a successful fundraising effort. However, it's critical to examine the terms of this funding to understand its long-term impact on the company's capital structure and potential dilution for existing shareholders. The change in accounting firms, while triggered by an acquisition, adds a layer of scrutiny. The previous auditor's concerns about XTI's ability to continue as a going concern highlight the financial vulnerabilities. The new auditor CBIZ will need to independently assess the company's financial health and internal controls. The core risk lies in XTI's ability to transition from a research and development firm to a commercially viable enterprise. Certification, production, and market acceptance all present significant hurdles. The company needs to demonstrate clear progress toward generating consistent revenue and managing its expenses effectively. In short, XTI Aerospace is high risk, high reward. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.